Hello, everyone, and welcome back. It's been a long time since my last YouTube video. However, I come back to you with a banger. A lot of information is going to be shared in this one video. Those of you following me on Twitter have seen this image in front of you before. Those of you in the Telegram channel have also seen this before. And of course, those of you in the Discord, specifically Premium, have always been seeing this. Not in this exact image, but the exact same formation. I'll be explaining what this setup is and how you can use it to form potential trade ideas intraday. So this is for all the intraday traders, those of you looking to take trades in and out of the markets within the same day, ranging from 1 hour expansions to multiple hours on end, likely a 4 hour expansion. All right, so without wasting any of your time, let's get into this video lecture. What is this that you see in front of you? That is deemed the Asian range, right? This is the Asian range high and the Asian range low. We're on the NASDAQ. So this is futures. We go from 20 o'clock, which is 8 p.m. to midnight 00. All right, so for futures, you go from 8 p.m., 20 o'clock up until midnight. And for Forex, you would use 19 o'clock, so 7 p.m. and up until midnight. Take the high and low of that specific range. I like to use the rectangle tool. You can use whatever you want. Just make sure you have the midpoint drawn out, as the midpoint in most cases is going to be your TP1, and TP2 of course is going to be the opposing end of the range, depending if you are bullish or bearish. So what exactly does this model entail? How do you actually trade this? How are we using the Asian range to determine our session bias or intraday bias, right? Firstly, you're going to want to locate key levels coming from the higher time frame. Right now, we are on the 5-minute time frame. Your goal is to locate key levels coming from a 4-hour and daily. Ideally, the 4-hour and daily key levels will always work better than any levels coming from the 1 hour. So, the 4-hour key level and the daily key levels are something to pay attention to, and that is the very first thing that you should plot onto your charts. Let's note that down. Step number 1, find the key level. Step number 2, locate the Asian range high and the Asian range low. Wait until the midnight open. Okay, so locate and draw the Asia range high. This is the Asian opening range, not the complete Asian range. So the Asia opening range high and low. Extend both the high and low to the right with lines, or if you just want to extend the rectangle tool, feel more than welcome to do so. And step number 3, the most important, I would say. Actually, number 4 would be the most important, but step number 3 really just puts it into perspective and hints to you that the setup is going to form. Okay, so step number 3 is to look for a turtle soup of an Asia range high or low while tapping into a key level. Okay, so look for a turtle soup, TS standing for turtle soup of the Asia range while testing a key level. All right. What is step number 4? So first off, I want to make something clear. I'm giving you guys the steps beforehand. Every single step is being revealed beforehand, and I will dive into every single step very soon. Okay, so pay attention, focus, write this down, pause the video, rewind, and focus. Okay, step number 4. Look for displacement. And those of you who aren't familiar with the term displacement, I will explain it. However, the rule goes, number 4, look for displacement of the Asia range, whether if you are bullish or bearish. Of course, if we're turtle souping the Asian highs, you look for bearish displacement. If we are turtle souping the Asian lows, you are looking for bullish displacement. And of course, step number 5 comes the entry. So where do you enter? Actually, you know what? We'll talk about the entry soon. Okay, so these are your steps. For the Asian range model. All right. Now let's locate all of this together inside of this range right over here. So firstly, find the key level. We have a 4-hour fair value gap right here above us. If we go onto the higher time frame, you would notice this is a 4-hour key level, 4-hour fair value gap. All right. Let's drop back down to the 5 minutes just so you guys can see this. The 4-hour key level right over here in the form of a fair value gap. All right, so key level marked out. What is this blue shaded region right below us? This is a daily key level in the form of a daily inverse fair value gap. Let's go on to the daily time frame and show you guys this. We have the daily inverse fair value gap that is currently being respected and held. All right, so that is this blue shaded region, the daily inverse fair value gap. Basically, another key level that we can use to play the Asian range. Okay. So in the 5-minute time frame, we located the key levels, both one coming from the 4-hour time frame, the other coming from the daily time frame, one above the Asian highs and one right below the Asian lows. Okay. Now, step number 2, locate and draw the high and low of the Asian opening range. For futures, once again, I will repeat, that is 20 o'clock up until midnight. Of course, New York Standard Time, UTC -5. And for Forex, that would be 19 o'clock up until midnight, UTC -5. Okay, so 8 p.m. to midnight for futures, 7 p.m. to midnight for Forex. Draw the high and low that is marked out with this line right here and this line right over here. Okay. Step number 3. Look for a turtle soup of the Asian range while testing a key level. Do we test any key level above or below the Asian range? Yes, we do. What key level do we test? The 4-hour key level in the form of this fair value gap. This is a bearish PD array. Price will want to turtle soup a short-term high while tapping into the bearish PD array and then head lower, breaking market structure, and so on and so forth. Okay, so we tapped into the key level for our higher time frame. Key level above the Asian range highs, turtle souping a lower time frame high right over here. to then head lower. Now looking like we are turtle souping the Asian range highs. What do you notice more specifically up here? We are turtle souping an hourly high. This is the 4 a.m. high in specific. And the 5 a.m. candle turtle soups the 4 a.m. candle high to then head to the downside, tapping into a 4-hour key level with a 1-hour CRT above the Asian highs, breaking market structure. Where does market structure break on the 1-minute time frame? Right over here. So this level right here, as soon as we got the close below, we confirmed a market structure shift to the downside, at least for the next session. All right. So until told otherwise, of course. In this example, we broke market structure while forming bearish PD arrays. We turtle souped a short-term high while tapping into the higher time frame key level above the Asian range. With the market structure shift, you are anticipating and looking for the turtle soup of the Asian range high while tapping this. All right. Next, step number 4, the most important, like I said before, is to look for the displacement of the Asian range, whether that being the high or low. What time frame do you need to use in order to look for displacement? Very important. Very, very important. You are meant to use the 5-minute and 3-minute time frames to look for displacement of the Asian range. Right over here. So if you're not entering right over here and you are entering using these steps right over here, you would be looking for a fair value gap to form while crossing into the highs of the Asian range. So what is displacement? Displacement is the creation of an imbalanced price range while crossing into a specific level. That specific level being the Asian highs, and that imbalance in price being that fair value gap. So the creation of a fair value gap while crossing into a level after a market structure shift is the displacement that you are looking for. You are simply looking for a 5-minute or 3-minute fair value gap while coming back into the Asian range. In this scenario, it would be coming back into the Asian range highs. Key level tapped, turtle souping Asian range highs, market structure shift, displacement into the Asian range. We have the fair value gap formation right over here. And the fair value gap was respected. However, we did come above it and then respect that other 5-minute fair value gap right above us, both of which were good entries. All right, so in both scenarios, you would have not been stopped out. Where are your targets? TP1 being the midpoint of the Asian range right over here, and TP2 being the opposing end of the Asian range. How exactly would this setup look like? For example, let's use this 5-minute fair value gap as an entry. We would put our stop loss right above this level right over here. Have the take profit level at the Asian range low. That would be a 129.25 point move, maybe slightly more, 129.75 point move with a 16.5 point stop loss, 7.86 R to R trade on the 5-minute time frame. Now, if we drop this down to here, still a valid trade at a 2.29 R to R, and still going for over 100 points in the trade. So why is the stop loss above here? Because this is a 5-minute order block. The idea is if we see displacement, we do not want prices to break through the order block. Okay, we want prices to respect the bearish PD arrays. All right. And that concludes the video. Actually, you know what? Let me talk about this point right over here where price decided to flip. So full TP was hit, the Asian range was fulfilled, and this just goes to show you that this cannot only just be used once during the day, it can be used many, many times. Today, for example, you could have used the Asian range model twice. Second time, turtle souping the Asian range lows, tapping into the key level. Let's drop down time frames, or sorry, drop to a 1 hour. We have the 1 hour CRT as well. This was spoken about in TSR Premium. Let's drop back down to a 15-minute time frame. We have the lower time frame 15-minute CRT. Validate that with the key level and the Asian range low. You now want to see displacement on a 3-minute and 5-minute time frame. Displacement confirmed with this first fair value gap here on the 3-minute time frame. Never got a tap into that fair value gap, and price quickly continued to expand higher. So you would have not found an entry while looking and waiting for that displacement for the trend to the upside here. However, if you drop down to the 1 minute, there was in fact a 1 minute order block entry that stemmed from this order block right over here. Your entry being the 950 candle that tapped into the order block. All right, so that concludes the video lecture talking about the Asian range model. Highly recommend taking a look at this. Some of you guys may have just found your model. Some of you guys may have just had your aha moment. Some of you may have just finally understood how to get your session bias or intraday bias in order to successfully trade. I hope to see you all soon in the future within the walls of TSR. For now, till next time, take care.